All right, take a look at this. The Dow down 878 points after President Trump threatened new tariffs against China. This after China says it will charge U.S. ships for docking at Chinese ports. And China is threatening restrictions on its rare earth minerals. So let's take a look at our interactive stock market map brought to you by FinViz, showing the top 500 stocks there. It's a sea of red, as you can see, as tensions with China have sent stocks tumbling, many of them. Let's go to CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, what kind of market response are you seeing? It looks not good.
Yeah, it's pretty bad, Liz. And you know, I think the real takeaway for me here is this shows that investors really see this U.S. China relationship and these threats, new threats of tariffs, as on a different level of magnitude than any of the other country, sector, or tariff threats that we have seen over the past few months, because investors haven't reacted like this to a tariff threat in going back to April, maybe even May, Liz. And so there are a couple of things that investors are reading into this. One, that threat of a higher tariff with China. Remember, we were back at 145% in April. We're now down to 30% because both sides are continuing to negotiate in good faith. But that higher tariff level, investors start to go, well, what is the Fed going to do with that? Because remember, they don't have a lot of that data that they normally use to make decisions. And when they're going to be meeting at the end of this month with the interest rates, to decide on interest rates again, I actually spoke to a former Fed member who has been in the room before, and he said, look, if I have this information and if we do get a higher tariff level as the president is threatening, my vote would be to pause. And you and I have talked about this before. The market likes interest rate cuts. So that's one reason why you saw them react so viscerally. The second is that we remember what happened under the first Trump administration, this tit-for-tat tariff trade war. It went for over 2 years. And that's why I've been looking at the sort of meeting on both sides of the table here with a little bit of skepticism, because I was expecting something like this to happen. And so we could be in for a very long back and forth. And then finally, these rare earths, Liz, okay, they are a component of everything from cars to defense weapons to semiconductor chips. And that would impact the AI trade, because I'm talking about NVIDIA, AMD, companies that have been powering this melt up in the stock market. And so if you see them impacted, then that's where investors get nervous. Now, just to sort of put a button on it, what I will say is a lot of the analysts that I have been talking to, they said, well, you know, the president reacted, he has a tariff threat, but justly, because China, by restricting access to these rare earths, they were sort of the ones that made the first move here. And the U.S. just had to react, had to do this as the negotiation goes on, Liz.
Kelly O'Grady, thanks so much.